Here's 2 strategies on how to trade CPI release. First things first, you need to be on a 30-minute candle. Right here is a 30-minute candle at 8 a.m. CPI is the very next candle. Let's let that candle play out. You don't need to do anything now. There's the CPI candle. Almost always this candle is very aggressive and in one direction. Now here's the strategy. Find the candle open and set a ray. Find the candle close and set a ray. Find the bottom of the candle and the top of the candle, and you'll have the 50% mark, and place a different color ray right there. So now this is your CPI range. When New York opens, it's going to see this and decide if anything above this is too expensive, it's going to sell down to the 50% mark. And then if this is still the no-go zone, it will then revert down to where this candle opened at. And then if this is too cheap, price will then reverse back up again. And this is your CPI range for New York open. Let's let the next candle play out. Now New York has opened. It's already starting to confirm that this is too expensive. So you're going to open short positions, place your stop at this high, or this high, depending on your risk management. You're going to look to write it down to the opening that we set of the CPI candle. And there's your winning trade. We've now confirmed that this is support. You already knew that this could be an area of support. Set your stop at the low and look to ride it back up or to the 50% mark. And there's 2 quick winning trades of how we look to trade CPI. Now, if all this is too hard, let me show you strategy number 2. Because this is a high volatility event, we've got our weekly swing indicator on because we expect bigger moves. This is our weekly resistance, noted as WR, and this is our weekly support, noted as WS. We expect price for the entire week because it's printed in advance. This doesn't move. There's no lag. There's no repainting. We know this for the entire week. We expect when price hits this, that it's going to reverse. Just like when price hits this, it's going to reverse. If you're a range trader, this works out great for you. So now let CPI do its thing. Remember, we're on 30-minute candles. Just like that we have hit resistance, and now you're going to open short positions. Set your stop at the high and let price do its thing. And there's your winning trade. The only reason why this works out for us is because our algorithmic indicator that prints for the entire week in advance, we know this is where price is going to look to reverse. Now let's try a different asset and let's see what you've learned. First things first, what time frame are we on? We're on a 30-minute time frame. This is 8 o'clock. The next candle is going to be the CPI print. As expected, it's a single 30-minute candle that pretty much goes in one direction. What do you do now? You grab the ray tool and you mark the candle open and the candle close. Then using a Fibonacci tool, find the 50% mark from the top of the candle to the bottom of the candle. Visually make that a different color. Entire candle is CPI's value. You want to see where New York decides where CPI's value is. If price stays above this white line, then New York thinks that CPI is too cheap and it's going to continue to push upwards. We can already see it's starting to confirm this is as resistance. You're going to now ride it down. And there's your winning trade. But I'm going to leave all this on here and think about this real quick. If all this is too hard to process or you just don't have the time to do this when it's happening, what if you had our weekly swing indicator on? You could preset your alerts on this line and all you have to do is wait for it to get hit and then act. Think about it. Have a great CPI. Have a great day. Pause to read our trade disclaimer. This is not financial advice. Education and entertainment purposes only.